because we had also downgraded backward its GDP performance of 2019. Once you take that into account, Lebanon's curve looks very similar to that of other countries. Now, you can see that for most of the other countries, there's for Morocco, the expected costs of the crisis, proxied by this change in expectations between October and April, is around 4.5 percentage points. For the case of Egypt, which publishes its statistics based on fiscal years, part of the effects of the crisis are probably going to be felt and are being felt in the fourth quarter of their fiscal year, which ends in June, and part of it is going to be felt in the first half of their fiscal year 2021, and that's the correct way of interpreting the potential or expected costs of the crisis in Egypt based on our World Bank published forecasts or expectations about growth. So these are the differences in our expected forecast. Now, interestingly, this is Saudi, which we expected as of April to experience a crisis effect of less than 2 percentage points and then to recover to the pre-crisis expectations. In the case of Morocco, it's more of a more dramatic V shape with recovery expected to the pre-crisis expectations well into 2021. But look at how small the expected costs of the crisis are for Saudi Arabia if you accept that change in growth expectations as a reasonable proxy for the expected aggregate macroeconomic costs of the dual shock. In other words, we expect one of the world's largest oil producers to suffer a lower crisis effect than key oil importers in the region. Now, before I go through all of the details of the empirical analyses that we have collected in the report and that we've pursued since then, I'd like to share 5 brief messages. One is something that I just insinuated, which is that changes in economic expectations, when you compare forecasts or expected growth before the crisis to expected growth once the crisis has taken hold, is a reasonable proxy for the expected aggregate costs. And they can be large. If you take, for example, the IMF's World Economic Outlook, its global expectations for growth for the whole world in January was that they expected the world to grow by 3.3 percentage points in real terms. And in mid-April 2020, the World Economic Outlook published its new estimate of -3. So a good proxy for the IMF's expected global costs of the crisis is the difference between these two numbers, which approaches -6.3 percentage points of the global economy's 2019 GDP. And our expectations for MENA in our published report, comparing our October expectation for growth in MENA of 2.6 versus our April 1st forecast of -1.1, the expectation is that that difference would be a reasonable proxy for the expected cost, meaning -3.7 percentage points of the region's 2019 GDP, which translates into, in dollar amounts, exceeding $110 billion for the region as a whole. Now, all of these are fluid, are changing, and I'll talk more about that. But it's, basically, the bottom line with that is that as of mid-May, the number for MENA and for the world probably has become even more negative than what was previously published just a few weeks ago. The second key message is that uncertainty rules, because in order to predict with any degree of precision what's going to be the costs of the crisis, proxied by these changes in forecasts or economic expectations between the pre-crisis period and the ongoing crisis period, there's a lot of uncertainty. First, from the point of view of each emerging market or developing country, you would need to predict or forecast what's going to happen to the global economy, to China, to the United States, to Western Europe, to Japan, etc. And those are uncertain because the pandemic hasn't ended, and the policy responses to it have not been, and therefore have not been consolidated. And then you would need to predict your own country's national policy responses, and importantly, society's responses to the policies and to the shocks. And this is particularly important in the context of a public health crisis of the outbreak, because both lives and livelihoods depend on how society responds to the pandemic and to the policy responses. And that's virtually impossible. These three things are virtually impossible to predict with any degree of precision. Now, just because uncertainty rules, it doesn't mean that we don't know the direction of the costs or what might be the key correlates of the expected costs. And we will argue, and we argue in the report, that as time has gone by, it has become clear that the expected costs across countries in MENA is significantly correlated with the 2019 quality of their health systems, and much less correlated with their exposure to the oil shock, meaning net exports of oil. Fourth, there is quite a heated, implicit or nuanced national policy debate in every country about how to face this crisis. And what we're advocating is a sequencing of policies, but without delay. Why sequencing without delay? It sounds like an oxymoron. The idea is that right now, in the middle of the crisis, and especially about a month ago, the main priority had to be, and to some extent still remains, dealing with the public health challenge. That means making the necessary investments in the protection of the sanctity of the health system, try as much as possible to bring about the so-called bending of the curve to protect the quality of the health system, and B, to reduce the loss of lives. But it is evident around the world, and particularly in emerging markets and developing countries, and I would say particularly in the MENA region, that there was a pre-existing set of conditions that merited long-term policy reforms to bring about a resurgence of economic growth with enhanced public trust. And what ties together the disaster relief policies, the emergency policies, with the long-term policy is that transparency is at a premium. Precisely because there's uncertainty during the crisis, transparency is incredibly valuable because people are concerned, there's anxiety, we don't know where this is going, and it becomes incredibly important if you want adequate societal responses to your policies, that this is done with a steady hand of transparency, of close communication, of sharing of information, no matter how technical that information might be. And transparency in this case goes well beyond just sharing of data and information, but sharing the thinking that it underlines the policy responses. No matter what's the level of education of your population, no matter how poor or how rich, this is going to be fundamental, not only for a successful, quote unquote, management of the crisis, both from the public health perspective, but also from the socioeconomic perspective. But there's going to be a long-term premium on transparent governance as the crisis subsides. Once a vaccine is made widely available, we will return to economic regimes that are highly indebted, with a lot of unemployment, a lot of slack capacity, booming in informality, and if handled well, we would be able to address these longer term challenges with more social trust, because transparency is at a premium during the crisis and well into the long term. And the truth is that the Middle East and North Africa as a whole, and mostly across the board, is facing a transparency challenge that predates the crisis. As Luigi mentioned, a lot of the countries in the region were facing recurrent, persisting social unrest, calls for greater transparency explicitly, but the citizenry, societies seem to be upset about corruption, about the poor quality of public services, as well as persistent weaknesses in labor market outcomes, both in terms of trends in real wages, the purchasing power of wages, but also unemployment and low female labor force participation. I will talk in the course of the rest of my presentation a little bit about transparency in testing, death records, for the longer term issues on debt reporting, and potential ambiguity in how governments publish key labor market indicators. So you can see that the common threat of the transparency challenge in the crisis and well into the future is one of transparency. So let me share with you just a couple of ideas. I'll try to accelerate the pace of my presentation in order to keep you awake on Zoom. But there's a couple of important analytical issues, research issues, that is worth taking a look retrospectively. So a first issue is this business of uncertain forecasts. Because right now, the name of the game for predicting the costs of the crisis is to understand forecasts of what will happen. And so in published IMF research in 2018, there's a very nice paper that shows that historically, using decades-old data through 2015, that economic forecasters, both from the private sector, as well as from the IMF and the World Bank, routinely fail to predict both the timing of recessions and the magnitude of recessions. And this was true even without pandemics. And the second insight into that paper was that uncertainty, measured by the dispersion of forecasts during periods of recession, tends to grow during periods of recessions. Oops. The second interesting idea is that of black swans. A World Bank report led by Carlos Weg, who's a macro economist, professor of economics at Johns Hopkins, SAIS. That report, published by the Office of the Chief Economist for Latin America in April 2018, talked about black swans events, which are defined as unexpected, rare but large shocks. And when these things happen, they cannot be characterized ex ante. What does that mean? It means that it's impossible to know before they occur what is the potential trends in GDP, meaning we cannot predict growth during those events, nor we can predict the volatility of growth during those events. This means that you cannot self-insure ex ante for such events. Okay, so the risks cannot be insured ex ante. Ad hoc external assistance for developing countries is therefore necessary, because even the best, the most prudent countries in terms of fiscal policy, having sovereign wealth funds or having saved during the commodity boom for a rainy day, even those countries are ill prepared to face the magnitude of the crisis that we're currently facing. And even a country such as Chile, which had become a model of fiscal prudency, has come knocking at the door of the IMF and the World Bank during the crisis. So regardless of ex-ante policies, there's going to be a need, and there is being a huge need for external assistance that can take various shapes. Now, for crisis management, there's an important distinction that, in my view, has been best characterized by Paul Krugman in the editorial pages of the New York Times, where he has called the policies an induced coma, meaning that the lockdown stops economic activity stone cold. But that's the objective of the policy. So the socioeconomic supports that are directed to the population during that time are not about the fiscal multiplier. They're not about Keynesian economics. They're about disaster relief, where you want to provide a minimum of transfers to the population, relief to the population, so that they don't have to go to work if you are in non-essential activities. In fact, for non-essential activities, you hope that the combination of social distancing policies with socioeconomic transfers and assistance to the population will actually have a multiplier of 0, because you don't want people to get back to work, right? And in certain extreme circumstances, that it's not alien even to the richest economies in the world, disaster relief might also take the form of food assistance. And this is something to keep in the back of our heads in the months ahead, as there's a real risk that global and domestic national food supply chains might break down. And disaster relief assistance is also different than structural reforms. In structural reforms, you want changes in policies that can bring an economy into a long-term sustainable path of accelerated growth, hopefully with poverty reduction. But disaster relief is not about changing policies. Again, it's about providing a minimum safety net during the crisis so that people can survive the social distancing policies that themselves saves lives. Now, because structural reforms and the need in the case of MENA to bring about a resuscitation and indeed an acceleration of long-term growth in the long term, even after the crisis, there's an issue of planning for these structural reforms now. That's why we're talking about sequencing of policies without delay. Now, the truth is that the World Bank, the IMF, the Federal Reserve, the ECB, the European Commission, governments around the world have been surprised at the severity and the depth of the current crisis. And nobody was prepared for prolonged lockdowns and leakages that are embedded in the emergency policy responses, even if they're well designed as disaster relief policies. Because in the response to such a deep and sudden, unfortunately, crisis, that is not a time where you can really be very careful about structural reforms and have the best program design. You need to act quickly. And that means that there will be policy errors and there will be leakages. And this is another reason why transparency is at a premium during the crisis and well after it, because it's important to be able to reverse course. If a particular cash transfer program's not working, if a particular subsidy program from small business owners is not working. And this, you see, this give and take of trying to correct past errors after you try to respond quickly in countries from around the world, including countries that are among the richest in the globe. And that's why that is yet another reason why real-time information transparency is at a premium well into the crisis and the debt relief phase of the response, but we argue well in the long term. All right. So those are the key messages, both analytical and policy-wise. The rest of my presentation is a bunch of numbers and graphs that sort of pin down some of the ideas. So this is a graph of the difference in the forecast that we had published in October versus our April 1st forecast, which were published in our report, which is available online. For MENA as a whole, this is the 3.7 percentage point decline that I was talking about. That's over $110 billion worth of crisis costs. This is the curve for the GCC. You can see that it's less shallow, that is less deep, sorry, it's shallower. And this is the developing oil exporters, that's Iraq, Syria, Iran, where we expected even deeper costs. And these are the rest of the oil importers of the region. Yeah. Now, just to give you a sense of how fast of the rule of uncertainty and how fast economic expectations change, in this graph, we just plot the expected costs of the crisis proxied by the difference in our forecasts of October versus April 1st. And we had done preliminary forecasting in the World Bank in March 19. And that's the blue curve. So you can see that in less than 2 weeks, the expected cost of the crisis almost doubled from about 2 percentage points of 2019 GDP to about 3.7 percentage points in less than 2 weeks. Now, in this graph, in this table, what we're showing is for each country, the ratio of the variance across forecasters in the private sector published by Focus Economics, and the value of the downgrade of their forecasts between December and March. And you can see all of these ratios are greater than 1, which means that the uncertainty was much greater than the actual downgrades in March, when the private sector was becoming aware that this wasn't going to be a run-of-the-mill shallow crisis. And the uncertainty around those forecasts is systematically correlated within the MENA countries with the degree of the expected crisis or the magnitude of the growth forecast downgrade. Now, earlier I mentioned that just because uncertainty rules over the expected economic costs of the crisis, that doesn't mean that we don't know the direction. I've already shown you that the direction is negative, where progressively, in a matter of weeks, expectations about the crisis costs keep becoming dire and dire, okay? Now, in this exercise, what we do is we run a little econometric model with the expected cost of the crisis as of March 19, and we run it against a proxy for the preparedness of each country's health system, proxied by the Johns Hopkins University Health Security Index as of 2019. And we run, it's a multivariate regression. We also include a proxy for each country's exposure to the oil shock, which is proxied by the pre-crisis level of net exports of oil as a share of GDP. And so as of March 19, you could see, and these were statistical significant relationships, that countries with better health systems, such as Saudi Arabia, the Emirates, Kuwait, were expected to suffer less from the crisis. And countries more exposed to oil, like Iraq, Kuwait, Qatar, Oman, Algeria, and Saudi Arabia, were expected to suffer more than Jordan. So both variables were important as of March 19. Now let me show you how the picture changed by April 1st. And an interesting thing, in these regressions, Lebanon is not an outlier. I'm prepared to talk more about that phenomenon during the Q&A system time, okay? as of April, when we shift the sample to the April 1 expected losses, GDP losses from the crisis, meaning less than 2 weeks from the previous graph, the correlation that survived is the correlation between the health system. It's steeper and statistically significant, and the relationship with the country's exposure to oil and the expected cost vanished. And this is because in our own forecast, we had internalized the fact that remittances, FDI, and official transfers from the GCC into the rest of the Middle East and North Africa were also becoming attenuating and thus hurting our expectations for economic performance during the crisis period. So although the costs are uncertain, we know they're negative and becoming progressively so, and that they're systematically correlated within MENA countries with the pre-crisis quality of their health systems. Now, this chart shows additional evidence showing that the correlation between the expected magnitude of the oil shock on each economy, the blue line is the expected magnitude of the effect of the oil shock as a share of each country's GDP, is sort of a heuristic measure of the income effect of the decline of oil prices on the oil exporters and the income effect on the oil importers. So if you are an oil importer like Jordan, lower oil prices are expected to have a positive effect on income. However, you can see that we're expecting a negative effects of the crisis. So there's no correlation. This explains why that previous regression analysis had indicated that there's only a very weak, there's a non-existent correlation between the expected costs of the crisis and previous exposure to the oil shock. Okay, now this is an update from the previous charts. It shows actually the changes in GDP growth expectations for the private sector, the consensus forecast from Focus Economics, comparing the March and May forecasts relative to December. Actually, we're comparing March to December, April to December, and May to December. And you can see how the V curve gets deeper and deeper. This is what we mean by, as the crisis has transpired and has progressed, economic forecasters are becoming progressively more pessimistic. Even though there's uncertainty, we know the direction is negative, right? And this is the curve for the subgroups as of May, all right? But look at this. In a matter of months, we've gone from almost a statistically insignificant expected cost in March to like a huge expected regional cost of over 5 percentage points. I already told you that the World Bank's estimates for the cost of the crisis as of April 1st were 3.7% of the 2019 GDP. If you trust the latest private forecasting estimate, it would be closer to 5.1 percentage points of the 2019 GDP, meaning that the total costs are probably approaching close to $150 billion for the region as a whole. All right.
Well, I think we should try to wrap it up.
Okay. I'm going to talk briefly about social cost. In this table, which is published in our MENA crisis tracker that went public a couple of weeks ago, and you can find it in our Office of the Chief Economist website, we've been doing some back of the envelope calculations of how those expected GDP losses will translate into social costs. And these are estimates of the percent increase of poverty headcount, the number of poor people at the three different poverty lines that the World Bank uses for MENA in percentage terms. The numbers are staggering. Okay. A key issue is that, however, that MENA, even before the crisis, was suffering from a chronic low growth syndrome. And what this chart shows is that most MENA countries in the long term, during a 21-year, 22-year period, including our forecast horizon through 2021, as of our October report, most MENA countries, these are the blue dots, had grown below a mediocre international benchmark, which is given by the median or the typical GDP per capita growth rate for high-income countries, upper middle-income countries, and lower middle-income countries. If all MENA countries had grown at the mediocre standard of the red bar, the region in 2019 would have been at least 20% richer. So what could be behind that long-term growth sclerosis? We posit in the report that a good candidate to explain that is lack of transparency. We discuss in the report 5 different econometric estimates that estimate what would be the GDP per capita losses of what's shown in this graph. In this axis, in the vertical axis, we're showing a proxy for overall statistical capacity, which includes dimensions of data transparency and data reliability and data access. MENA was the only country that in absolute terms, not in rankings, but in absolute terms, in their data transparency scores declined. And as of 2018, have become the worst performing region in the world. And the effect of that decline in our models is a loss ranging between 7 and 14% of GDP losses. So it's, before I told you that if MENA as a whole had grown at the mediocre typical rate observed of growth rate observed in the rest of the world, MENA today would be 20% richer. Well, just from this shock to transparency, we can explain anywhere between 7 and 14% losses of GDP per capita. Okay, fast forward to today. In our tracker, again, that it's available from our chief economist office, one of the graphs that we publish has to do with COVID-19 tests per million population. Throughout the world, nobody is even close to universal testing. And that means that the statistics about the spread of the virus and the death rate of the virus are not reliable or comparable. But I wanna highlight here, Algeria mysteriously stopped reporting tests, COVID tests, in the last week. Because testing for COVID is not universal, an interesting proxy to look at for the death rate is to compare 2020 monthly death rates in a given population to what was usual death rates in pre-crisis years. None of the MENA countries have publicly available information on deaths for any cause. The data that's available in the WHO website is sparse, it's old, and it cannot be used for the analysis. We noticed a media report recently for deaths in Cairo, Egypt, that indicated that total deaths for any reason were lower in April 2020, in the middle of the pandemic, than they were in April 2019. Now, this phenomenon of declining death rates in the middle of the pandemic relative to the previous year when there was no pandemic could be true. It could be true because nobody's driving, so there's fewer car accidents, and since traffic accidents are a huge source of morbidity in MENA and in other countries, it could be true. But it's impossible to know whether or not these media reports that cite official sources are reliable because the data is not publicly available. And so there's no way of knowing if that is true. Debt was an issue at the end of 2019 for Lebanon and other countries in the region. And it's going to become even more of an issue going into 2021 because the increase of indebtedness that's needed during the crisis. We have a long-standing pre-existing condition of opacity in the way that the MENA countries report their debt statistics. For the case of Lebanon, we know that they report central government gross public debt. but we don't know if they even have state and local government debt, or if they have contingent liabilities in social security funds, or are there extra budgetary funds. So doing proper debt sustainability analysis and going into debt renegotiations with debt opacity puts the government and the people of MENA at a severe disadvantage, because people are going to say, look, I don't know how big the hole is, so I do not know, and I have to trust you when you tell me that is X, Y, or Z. So this is going to become a big issue, increasingly so going forward. And in terms of labor markets, as many of you know, there's been a persisting challenge of the region to produce jobs, dignified jobs for young, educated women in particular, but in general. And so when you start scavenging the official websites to see what they report in terms of unemployment for women, for young people, for males, for the broader population, and you use independent data sources because you don't have access to the labor force surveys that the governments use to compute their unemployment statistics, it is virtually impossible to replicate the official statistics because there's no guidance about what is the definition of employment. For example, do rural women that participate in subsistence economic activities, are those counted as out of the labor force, employed, informally employed, fully employed, unemployed? And it turns out that that's a huge share of the population. When you compute female unemployment rates using the ERF, the Economic Research Forum labor market panel surveys for Tunisia 2014, Jordan 2016, Egypt 2018, you compare it to their official reported national estimate, and you use the market definition, meaning that you're employed as a wage earner, or the extended definition that also includes all the way to subsistence activities, none of the official estimates match or even come close. It could be that there's sampling error here and that we're not experts at measuring, or not as experts as the official, as the government. But it's worrisome when you cannot replicate, or not even come close to replicating official statistics. And it could be that in case of Egypt, they're using this definition, in which case this is sufficiently close, meaning that they're using the market definition, and that requires that the person be actively searching. It looks like that's the definition they're using, and this difference can be within the confidence interval of the estimates. But there's no way of knowing, because when you go to the CAPMAS website, it doesn't tell you if they include subsistence or not, if they use what ILO norm they use, or what is it. So there's great ambiguity, and it hampers our understanding of the functioning of labor markets, and it might be distorting particularly the role of women in MENA labor markets. And with that, I will end. Thank you very much.
Thank you very much, Daniel. I think there is quite a lot of food for thought. And I'm sure that we have already a few questions, and I now invite everybody to write their questions in the chat, so that then we will give the floor directly. But I will start myself posing a question to you, because I'm quite puzzled by, and I totally agree that there is a need for sequences, policies without delaying. Obviously, you pinpoint there is a need of interconnecting three levels of intervention here in disaster relief, and because as economists are in an induced coma, we know even Western industrialized economies, there is a need for the state to provide the subsistence means to those who are out of work for lockdowns, and that is extremely difficult even in rich economies, and we have seen it is even more challenging in MENA economy, where sometimes more than 50% of the labor force is in informal sector and makes a living on a day-to-day activity basis. It's extremely difficult to intervene, not only in terms of fiscal capacity, but also in ways of handling it. And then of course, we have the long-standing need for undertaking structural reforms that we know has been in the MENA region particularly complicated, also intermingled with the difficulties of operating with the political economy of the region that we know doesn't facilitate the reform process. And thirdly, as you say, I mean, there is the longer term issue of providing the region a better insertion into the global value chain, so that the MENA can become more competitive. So there are extremely challenging issues, and I wonder how can you ensure that the sequencing is done in the right way. And I agree that we probably should look for less than perfect policies at this stage, but the delay issue is particularly challenging. So just if you could give us some thoughts about this.